Good evening, my friends. Hope everybody is having a good day. Another low-key nothing burger in the market. For me, at least, we're actually going to talk about the missed trade opportunity that there was tonight. Let me share screen. And we'll wait just a second before we get started here. We'll wait just 1 second. See, somebody is having trouble getting in. I am seeing that our attendance is filling up as normal. So it's a user error for that person, unfortunately, Dan. Because I don't know if you'll be able to make it live or watch the recording. We do have to get started in just a minute. But I can see that other people are able to join. So we'll see. Hopefully everything works out. And I imagine that we'll get, if JBab is on and I see him responding, maybe can try and help sort of out. But it has to be some sort of Zoom error because everyone else is on. So we'll be all good to go. With that being said, my friends, welcome to lesson 5 of the Rake Trades LLC Mastermind. I am incredibly excited to have you. This is probably my all-time favorite lesson. I think that especially over the last few, I think I've really refined it down to a very good explanation. Although I will say that tonight's lesson is the subject material of tonight's lesson is like, let me go back a little bit. Yesterday, for example, we had somebody mention in the mastermind chat or the questions area that the levels, as soon as we finished the lesson, people had mentioned, okay, this might take a little bit of time to click. And I absolutely agree, right? I sent out this message. It will take a little bit of time to click. For a lot of you, I imagine the levels have already clicked and you now are like, of course, you still have things to like tweak and learn here and there, but you understand for the large part the concept of it. For those of you who feel like you still need a few more rewatches, no worries. The levels lesson, in my opinion, is not typically the one that is unsolvable, right? The levels lessons usually clicks pretty quickly with most people, right? Where sometimes we do ultimately end up in people needing more of an in-depth explanation just because it's such a thick topic is multi-time frame analysis as a whole, right? Multi-time frame analysis is a tricky subject. So in order to combat this, what we do, and I've talked about this before, some of the other classes I try and keep it a secret with you all. Of course, it's not a secret. As soon as tonight's lesson is done, you are going to get access to every previous, besides 1.0, which wasn't explained as well. You're going to get access to 2.0 through 7.0, or 3.0 through 7.0, all of their lesson 5s as well. So for each individual lesson 5 that I do, I use a different example. Let me make sure everyone's muted. I use a different example of a chart, right? Most of the time I use a current chart from like that day, right? So like unlike the mRNA example where I'm using a chart that I've used countless times before to explain it very well, this example always uses a different chart. And with multi-time frame analysis, there's always more stuff that you can pick up, right? So as soon as tonight's lesson is done, you are going to get access to not only this recording, right? You're also going to get access to all of those previous lesson 5s. And for all future classes, you will also get access to that lesson 5, right? Because I believe this subject ongoing can be a little bit tricky and is something that, while conceptually you may understand after one night, you literally need screen time. Like there's nothing I could teach you, even if I sat here for 6 hours explaining it all and all and all. It wouldn't matter, right? Because you need the screen time to actually sort of grasp some of these concepts that we're going to talk about tonight. So in addition to those lessons, the previous classes, lessons 5, you are also going to get 5 or 6 bonus lessons from previous masterminds, right? So we will likely do a bonus lesson for you all as well, right? But in the past, after classes have finished, I have done a bonus lesson of some sort for either that class or the last 2 classes combined when we had quick back-to-back masterminds. There's a variety of different videos that you'll get access to in there. 2 of them are what I call bar by bar videos, where I take you through an individual chart and we look at each 5-minute candle and the 2-minute candle and compare sort of what we're seeing in there and what each candle is telling us. Those are probably 2 of my favorite videos ever. Those will be listed in the Kajabi, the bonus lessons Kajabi, as bar by bar review, right? What you'll then also get access to is 2 live trades where I record my screen and I describe my thought process as the trade is occurring, what is going on in my head. I'm saying, okay, I'm watching this to trim as well as the chart. So you can start to see some of my thought process in real time when it's just me. And I don't, most of the time I honestly forgot I was like on camera, right? So at the end of tonight's lesson, you are going to get a huge video drop, like 12 videos, right? Now, this is very specifically coordinated to come after lesson 5 for a few different reasons, right? First, I didn't want to drop those videos and have you doing the bar by bar review video before you knew the last 3 lessons worth of material, right? Before you learned our system, it wouldn't make sense for you to be watching a more advanced video, right? So you have all of access to all of these because now I believe that they will truly be of significant value to you because you understand our system, right? The other thing that I will say is that all of the trade reviews that are in the hashtag recordings area of the room, I highly recommend that you start to then study like 2, 3, 4 of those a day, because now you have the technical system in your background, right? In your knowledge, you have this technical understanding that these trade reviews will make a whole lot more sense, right? So the other reason that we have strategically planned for lesson 5 to be today is that tomorrow I am leaving for Houston. And while we plan to do a quick trade review or psychology breakdown tomorrow and Thursday, Friday is a Houston event where it's unlikely to be, unlikely for us to have a Zoom or anything like that. But for the first time in history, the Rake Trades LLC Discord might not have people on to respond to your questions in the Discord itself for like 1 to 2 days. So please bear with us. We're doing this strategically so that we're giving you like 12 or 13 videos worth of content, so that on the days that we won't be here to answer questions in the mastermind questions area, right, that you still have a ton of videos and content to work through, right? You all know us. I hope that you can tell over the course of the last 2 weeks that no questions go unanswered and that we're not leaving you behind. But what I will ask is that on Friday and Saturday, we're doing this event for you all. I know that not everybody lives in Houston, but there are so many people traveling in. We're doing this, everyone. I want myself and the team to be fully present there and enjoying it. So give us like a day or 2. Most Discords don't answer questions at all. So for 1 or 2 days, we're going to look like other Discords where we might not, where you might need some hours in between response, right? Ali will be at home because she lives in Europe. She's not able to make it, so she will be able to handle any emergencies, right? But seriously, all I ask is that just give us those couple of days, because we're doing this event for our students, right? And I can't wait to meet some of you that are part of Mastermind 8.0 while we are there, right? So that being said, that was just a little prerequisite information that I wanted to make sure to cover, right? You, again, kind of recap, you're going to be getting a huge video drop as soon as we're done with class tonight. And then please bear with us on Friday, Saturday, and Sunday, as the team will be engaged in an in-person event and we'll be meeting some of you in person, right? That being said, it's all back to business afterwards. Again, it's not like we're ever going to let any questions go unanswered. I just ask that you give us that little bit of time. And I really do hope that you understand why, because it's not like we're doing something. It's not like we're going on a bender by myself. Like I'm going to Coachella by myself and you know, whatever. This is for you all, right? So that being said, let's get into the lesson tonight. We have a very thick one. We are going to cover a variety of different topics, and honestly, a variety of different main topics, right? So the first topic, the main topic of the evening, the one that this lesson covers, is multi-time frame analysis. Now, I added this little note here today that top-down analysis was a lie, and that's not really fully true. Top-down analysis isn't the incorrect way to think about multi-time frame analysis. However, top-down is not the way it works. Timeframes impact each other, and that's really what we're going to take a deep dive into tonight. We're also going to take a deep dive into failures, how to describe a failure to go higher, a failure to go lower versus a failed buy setup, a failed sell setup. When are these actionable? When are these tradable? And how can we help start to see the market move even better? Then lastly, what we are going to do is introduce the 4 rules in our checklist that we have prior to entering a trade. Now, in lesson 8, we are going to circle back and we are going to cover these 4 rules more in depth, along with how do we find stocks each morning, what is the favorite setups, that kind of stuff. So just because we're finishing our technical deep dive lessons tonight does not mean that I expect you to know everything, right? There's obviously still stuff in lesson 8 from a technical perspective that I'm going to teach you. How we find stocks each day, building a watch list, right? What I'm looking for in the morning, my favorite setups, all that. That's still to come, right? However, that being said, within these last 3 lessons and the 4 rules that I'm going to give you tonight that is going to tie everything together like the most gorgeous experience of all time, right? You will know everything from a technical perspective that I look at. When I look at a chart, right, you will be able to see the stuff that I see. Right now, it's going to take you screen time, but you will know all of the things that I am looking for. These last 3 lessons will be your holy grail, so to speak, of rewatching, reviewing over and over and over and over again. All right. So a little bit of review from our last few lessons, and we will go through this section a little bit quicker as we just talked about this last night, right? But as technical traders, we as a group use a triangle offense, not a set play. We react to the defense, right? Now, in order to react to the defense, we need to have some rules that we follow, and we need to understand why those rules come into play and how we can start to utilize them in our trading, right? First rule, markets are always either trending or ranging. There is no in between. Second rule, the break of a previous candle, high or low, should, and I'm going to say it one more time for the people in the back, should, just kidding, I don't know if you heard me loud enough, should get continuation in either direction. But when what should happen doesn't, we take that information as a clue. We are going to do a deep dive on those 2 rules tonight, right? Now, our 4th rule, and possibly my favorite rule, to be honest with you, is that candle analysis is applicable on all time frames, meaning that if you have spent your life staring at 5-minute charts and can actually start to develop a decent sense of what candle might come next on a 5-minute chart based on the subsequent, or based on the prerequisite, the candles that came before it, right? If you can take that and do that on a 5-minute chart, you can apply it to a daily chart and look to start capturing much larger moves. Another way to think about this rule that candle analysis is applicable on all time frames is that a buy setup on a monthly chart is just as valid to us as a buy setup on a 5-minute chart. They just offer different types of trades, right? Now, the last and final rule is that markets move from level to level. They have a purpose. They are not doing what they do randomly. They are not making these moves without purpose. They are not irrational, crazy. Well, sometimes they can be irrational, but they are not without purpose. The markets have a goal in mind for what they are hoping to achieve. And in reality, what they do most often is move from one level to the next level. And we're going to talk with a great example of that tonight on a trade that I missed. Also, I totally forgot to mention, we have Mr. Ron G and Jay Groove on tonight to help answer questions and anything you might have. Obviously, I trust them to answer like the back of my hand. And thank you both for being on, right? All right, so first thing that we talked about, right, was our triangle offense and reviewing that. Now, then in addition to those rules that we created for the triangle offense, for support and resistance, we have some concepts. I prefer this word to be concepts rather than rules, because I don't want these to be thought of as firm rules, right? The first is the knock-knock principle. The more times that a level is tested, the more likely it breaks and breaks with power. Next being the Uno reverse. Once a resistance is broken, the previous resistance should act as support when retested. Once a support is broken, that previous support should act as resistance once retested. Now, the final rule that we have for support resistance is more in relation to our previous level, which is hit the body, my friends. Everybody, all I ask for this rule is that you say it with me one time real quick. Everybody just say it with me one time. The open of the candle that changes trend. One more time. The open of the candle that changes trend. Where do our levels come from? They come from the hourly chart where trend changes occur and we mark the open of the candle that changes trend. I hope that even if they don't click and you don't understand them as much as you like in a dream world would, which I don't expect you to yet, I really hope that after last night's lesson, you have a more defined system for how you draw support and resistance than you ever have before. Period. Right? I really genuinely hope that. If not, start asking some questions because we will more than happily help get you to that point where it is the least subjective level system of all time. You know exactly where you're marking up, right? Now, with that, we have 3 pillars of our strategies, my friends. You should be familiar with all of these 3 tonight. First, we have candle analysis. Candle analysis is finding a buy or sell setup, which we've talked about in length, but it also includes finding a failure pattern, right? Failure patterns can provide us with trade setups that I personally love. So we are going to do a deep dive on what exactly failure patterns are tonight. Now, the second pillar that we have is trend analysis, right? Higher highs, higher lows, lower highs, lower lows. In lesson 3, we did a deep dive on this, but over the course of the last 2 lessons, we have hinted at the fact that this also includes multi-time frame analysis, which is a subject that is so thick, she requires a lesson of her own 100%, right? Trends are different on different time frames, and that is one of the key subjects that we are going to be addressing tonight. Lastly, the third pillar of our strategies from our previous lesson, hours. I just yelled hours. Levels, which are derived from the hourly charts, right? Now, I know I'm moving through this quickly. However, I am hopeful that everything I just mentioned to you all is review because you've watched our previous lessons at least once. I'm hopeful. I think that I'm getting so many DMs of rewatching you all. I always say that, and truthfully, each class, people get more and more energetic. So like, I wouldn't be surprised if I said this to the next class, but this particular class is I'm getting more DMs now about like rewatching lessons and the activity levels than I've ever had. And that's by far, even over MN6, which was a super freaking active class. That one was nuts in terms of activity. I truly think that you all are like, I'm getting more messages about rewatching. I did that poll on my story yesterday or over the weekend. Everyone was like rewatching. And that means the world to me. And I think you will see the benefits in your trading, right? Now, we have 2 methods of entries that we use for entering the trades. First, we have our sell setups. We see a move down followed by a rally. And within this rally, we have a bar that takes out the previous bar's low, and that ultimately ends up triggering us into a trade, right? I think everybody should be clear on that. Now, in addition to sell setups, we have buy setups, right? The most applicable during with trend plays. During an uptrend, you wait for a pullback to establish support and a bar to take out the previous bar's high, leaving us with our signal bar and our entry bar, right? Now, here's an interactive question that I'd like, and again, this is not for Instagram, it's just for me, right? But how many of you have seen a shit ton of buy and sell setups occur since we taught this in the lesson, right? A lot. I'm talking you've seen a lot of buy and sell setups occur. 4,985. That sounds like, I'm going to go ahead and say that's the exact number, right? Okay, now follow-up question. How many times have you seen a buy or sell setup occur and then fail? It doesn't work. It goes in the other direction, right? It doesn't work. A lot as well, right? For also agreed, Brandon, 4,985. That's the number I was looking for. I'm sorry, everybody. You all else were wrong, right? So it's no surprise, right? And I'd like to believe that I led you all into that with a very clear transparencies. Buy and sell setups they work and they fail. Why? Because it's the way that markets move, right? Like it's how markets move. It's how they move from point A to point B, right? So in order to get there, you're going to have successful buy and sell setups. And then in order for something to reverse and start going another direction, it's going to need to fail a buy setup in order to do that, right? Like if this is an uptrend and all of a sudden we start going into a downtrend, at some point a buy setup would have to fail, right? Otherwise it's going to be straight down, which is not the way markets don't move straight and straight, right? So I'm glad that we're all on the same page, that we see and I recognize that there is a ton of buy setups working, There's also a ton of buy setups that fails. That's why I caution you not to take every buy or sell setup that you see. They are only one piece of the puzzle for us. Now, one note that I will make is that the longer time frame you go out, the less likely that the buy setup fail or sell setup fails, in my opinion. Like weekly buy and sells typically they don't fail very much because it's just more data. And if they do fail, the move in the other direction is typically pretty large, right? If you go down to something like a 2-minute chart, right? Because a 2-minute chart just has so many candles and it's moving so much, it's going to have a lot more buy and sell setups that both work and fail, right? Because it needs to have that movement in order for the longer time frames to have their trend, right? Now, I want to talk about next is this concept of a failure to go higher, right? Now, this concept of failure to go higher, failure to go lower can get a little bit confusing, but I believe in Mastermind, I want to say 5 it was when I first created this example, maybe 6. It's either 5 or 6, but I created this explanation where I think now we really have it down to it. It's a very clear understanding for people, right? So let's talk about our first, let's go back a little bit. And we have this rule here, right? The break of a previous candle high or low should get continuation in either direction, right? So if we are in a vacuum looking at this move up right here, this candle right here, and then subsequently the break of its low, would we describe that as a failure to go higher? Could that, not necessarily would we, could that be described? Does that potentially fit the bill? No right or wrong answers here. I don't expect you to get this right. This is what we're explaining tonight, right? Yes, right? And I see people with the could potentially, right? But the answer is yes, right? Based on the rules that we know, right? The break of a previous candle high or low should get continuation in either direction, right? So broadly speaking, the fact that we broke above a previous candle's high and then pivoted and started to move lower, in theory, we failed to go higher there, right? Now, would we be looking for shorts at this candle? Or would we be looking to short beneath there? Even if there's a level there, barring exigent circumstances that make it like perfect, would we want to be looking for a short entry there? Not really. No, it's be counter trend, right? Even beneath this bar's low, you wouldn't really want to short that. That's not a sell setup, right? Remember, a sell setup is something that is within a downtrend. Based on the information we have at hand here, this is an uptrend, right? So we don't look to short that. In reality, more so what we would be looking to do, depending on, again, a lot of other factors like levels and longer time frames and such, is potentially take a buy setup right there, right? Now, before we go too much deeper on that, I want to make sure that we're all clear, right? That failure to go higher as a term, right, is largely speaking a conceptual, it's a concept, it's an idea. It's something that has reason to go higher and attempts, yet fails, right? So for example, I'm actually going to take this line off for now. Like we all just said, right? Here, based on the fact that this candle broke above the previous candle's high, based on what we know about our rules, right? Do we have reason to go higher? Yes. Did we attempt to go higher? Yes. Yet we failed. So largely speaking, just the idea that we pulled back, you could say something like, we failed to go higher and we started to pull back, right? Okay, boom, no problem. I want you to start to think of this idea. Actually, no, let me pause before I even get there. Let me pause. Right? And this is too early too, actually. Okay, sorry, my slides were out of order for some reason. I moved them around today because I thought they were in the wrong order. Turns out they were in the right order and I moved it to the wrong order, right? So now, right? We have talked about failures to go higher from a broad concept point of view. We also mentioned that in this particular setup, we would then be looking to potentially go long right there, right? We'd be looking to go long above there with a stop below there. I know that just give me like 10 yeses real quick. We understand why we'd be looking for a long there, right? Everybody good? Sweet. Awesome. Thank you. Appreciate it. With trend long buy setup, right? That with trend long buy setup triggers, right? Now, what happens from there? Right? Here, ultimately, what do we see? Right? This buy setup attempts to work. We trigger, we start moving higher. You possibly have some profit, right? But before reaching this swing high and making a new higher high, aka before does this confirm as a higher low, right? As this pre-sell, instead of getting that follow through and continuation up, it starts to move down, right? We start to see a move down there. So here we see an example of what? This is a 3, maybe 4-word answer, depending on what you're looking on, how you're defining the last word. But what would you say is the 3 or 4-word answer there? We see a blank, blank, blank. Any ideas? And I don't expect anybody to necessarily get this right. Just curious. Possible double top, PHL not confirming, higher low, failure to go higher, failure to go higher, failure to go higher, failure to go higher, failure of the high. Okay, you are not wrong. None of you are wrong with the failure to go higher, right? Then the people who said potential higher low are also not wrong. But in reference to what I was specifically looking at, which was this buy setup triggering, trying to go higher, and then making this move there, right? Essentially, what we are seeing is a failed buy setup, right? This buy setup ultimately fails, right? And this buy setup fails and gives us this move in the other direction, right? Now, here's the part where I want to try and clarify a couple of differences in terminology for you, right? This failed buy setup is also an example. It fits into that broad category known as failure to go higher. You see what I'm saying? Like we talked about here, this was an example of a failure to go higher, right? Just in the fact that we had reason to go higher, attempted to go higher, yet failed, right? But failure to go higher is a concept. It's an idea, and it's not something that we would want to be necessarily shorting right away, right? Here we see an example of a failed buy setup, which also acts as a failure to go higher, right? Like we failed to go higher right there. We had reason and rationale to go higher, right? But we didn't. So the analogy that I have come to use for this example that I believe explains it well is a couch in a love seat. I don't know why exactly this one came to my head when we were doing this, but it did, right? Here we see an example of a failure to go higher. Right here, we also see an example of what we would call a failure to go higher. We broke above the previous candle's high, then we start moving down. That would also fit into the definition of a failure to go higher, right? Oh, wait, I'm marking on the wrong. There you go. Right? The break beneath this buy setup's low, which confirms the buy setup fails, that would also be a failure to go higher, right? So think of failure to go higher like a couch, right? It's a broad conceptual idea. You ask me about a couch, I don't know what you're talking about, bruh. Are you talking about like a pull-out couch? You're talking about a futon? You're talking about a recliner? Like there's so many different things. And that's all. The couch is this broad idea, right? But this failed buy setup example that we just talked about, right? This failed buy setup example where it's long here, the stop below there, when that fails, right, and ultimately ends up triggering, let me clear this out, right? When the buy setup shows signs of failing, and here we start to see a potential lower high start to form, right? That would be an example of a failed buy setup, right? That is like a love seat. It is a specific version of a couch. It's a specific thing. Are all failed buy setups going to be failure to go higher? Yes. A love seat is always going to be a couch, right? At the end of the day, a love seat always will fit into the definition of a couch. Are all failure to go higher's going to be failed buy setups, aka actionable type of things that you could short, right? For example, right here, right? And let me actually do this and do this and get this. Right? Here we see, right, that always a failed buy setup is going to fall into the category of a couch, right? It's always going to be a love seat, which then by definition always falls into the category of a couch, right? But a failure to go higher in general does not necessarily mean something that is specific that you are required to like, that it's not necessarily an actionable trade. You could just be referencing the failure to go higher, much like we talked about in this example. I know it might be a little bit confusing, but I promise you again, this is one of those things that will definitely click, right? So failing to go higher overall is a concept. Something like a failed buy setup could be an example of something that's actually a tradable move, right? Like we talked about, you don't want to short right here. This doesn't look like a potential lower high, right? However, right here, you could make the case and rationale for taking a short position. Now, at the time of this oval, we do have that potential high, lower high, but we are not in a downtrend, right? Let me clear this again. During this one, we are not in a downtrend yet, right? We have to take out this low to do it, right? So in theory, this wouldn't be like one of our favorite short entries because we prefer our shorts to be more in a confirmed downtrend, right? However, one of the things that I will mention, and I forget which mastermind multi-time frame lesson it is, but I encourage you to literally go through all of them. Again, you can skip the beginning review parts, but I encourage you to go through all of them. There is one example that we had, right? And on that example where we talked about multi-time frame analysis for that day, there was a level that came into play. The market rallied up, it then tested a level from underneath, pulled back, and then presented this opportunity, right? This exact type of short opportunity, where it isn't technically a sell setup. For those of you who are like sitting there like, well, a sell setup is in a downtrend. You're 100% right. By definition, sell setups for us are in downtrends, right? But here is another potential area where you could look to take a short trade, would be on a failed buy setup or this potential lower high. Now, in order for you to take this trade, right, in my opinion, you would need something very specific, like two things. One, a level there that could be acting as a lower high. And two, time frame analysis, multi-time frame analysis confluence, which we're going to talk about tonight. Right? So I know that's a little bit confusing, and I honestly think that I explained it in this lesson a little bit more confusing than I did in the last one. But it's this idea that failure to go higher and failure to go lower are broad concepts. These specific, potentially tradable actions that would come out of those would be a failed buy setup or a failed sell setup, right? Now let's take a look at just another example or two, right? So again, by definition, a failure to go lower is something that has reason and attempts to go lower, yet fails, right? So failure setups often provide strong moves in the other direction, right? So here, for example, we see a failed sell setup, right? Let me clear these drawings, right? Here, we can see that we have a downtrend, we get a rally, and then a bar breaks the previous bar's low right there, right? The sell setup there triggers. It triggers. Do we all understand why in this oval, the cell setup, I know I'm asking you stuff that I imagine you understand, but I just bear with me and humor me. Do we all understand why in this oval, a cell setup technically triggers? Right there. Perfect, right? Exactly. The break below that candle's low, that wick, right? Where in the moment it broke below it, right? So in there, a cell setup triggers and then ultimately fails, right? This gives us sort of the same thing we were looking at here. Rather than a potential lower high, here we can see that that cell setup triggering and then failing is what ultimately failing to go lower puts in that potential higher low that then flips the trend, right? So when I asked you earlier on if you were seeing buy and sell setups work and fail consistently, the answer should definitively be yes. Why? Because this is how markets move, right? If you're wondering how do things shift trend, they fail buy or sell setups, right? This was in a downtrend. Then it flipped to an uptrend. What was the process of it flipping from downtrend to up? It was this sell setup failing, right? Now, then we start to ask ourselves the question, right? Why exactly did that sell setup fail, right? What was it about the chart that caused that sell setup to fail? Right now, there could be any number of reasons, maybe a market catalyst earnings, maybe there was a level there, right? But it's also important to understand for us that candle analysis is applicable on all time frames, right? That's actually not, I feel bad now because that's the one I circled like super dramatically. Actually, that was the wrong one. That wasn't the one to dramatically circle. Please bear with me because that was the wrong dramatic circle, Jake. Right? But sorry, let me pause, revamp, right? What exactly do we see here that ultimately causes this shift in trend, right? We see the failed sell setup, right? We see a failed sell setup like we just talked about. That shifts us from downtrend into uptrend. Now, the question is, why did that sell setup fail there, right? Why did we get that love seat right there, right? Why? Right? It's interesting to note that if you look at this larger time frame or same time frame, but just more zoomed out picture, what do we see was actually happening? Like right there, what was happening relative to this previous low, right? Inside of that failed sell setup, inside of the failed sell setup that occurred right there, or I guess I would say this failed sell setup there occurred inside of this larger picture time frame to go lower, right? So I wouldn't have necessarily taken the trade, right, when we break back over this candle's high, right, because of the failure to go lower, right? However, there we start to notice that a couch is on sale, right? When we start to see this failure to go lower here, that's a clue for us that conceptually the couch is going on sale, right? And we need to start figuring out which one we want to pick, right? Then as we get a sell setup that fails, that actually offers us a potential entry that we could take, right? Saying that, okay, we saw that we failed to go lower in there. And since we failed to go lower, I'm going to take a long on the failed sell setup, looking for it to act as a potential high low, right? So in the larger picture, this area, right? And let me actually clear that. In the larger picture of what we're looking at here is a failure to go lower. That's a couch. In this zoomed in specific, that is our love seat. That is our failed sell setup that then triggers and offers a move in the other direction, right? So all failed sell setups will fall into that category of a failure to go lower, right? But just because we say something fails to go lower does not necessarily mean that we have an actionable trade off of it, right? So I hope that over the course of that last few explanations, that is starting to click and make a little bit more sense, right? In terms of failures, in terms of understanding. But because this is how charts move, gang, right? Like that's why I asked you if you're starting to see them work and fail, is because this is how charts move. They go up and they trend up, and then at some point when they're going to flip into a downtrend, a buy setup fails, it forms a potential lower high, and then we move down. Then we move down, we trend down, then maybe we consolidate, right? And we break out of that consolidation after a failed sell setup, right? So the market is moving with a purpose at all times, and it is using buy or sell setups to do so, right? However, like we know, not every buy or sell setup is going to work, so we have to recognize the failures of these patterns as well and how we can use those to our advantage, right? Again, this is not something that I expect you to understand perfectly yet. It is going to take a little bit of time to click. I'm sure that you are going to have a couple of real-time example questions that pop up. I expect that. Same with the rest of this multi-time frame analysis lesson. I expect you to have like this. There's a reason I give this lesson to all former classes, and you get off because this is a subject that needs to be reinforced, right? So with that being said, though, that is our full recap and thorough breakdown on failures. I think that was a really good breakdown, especially in the later half of that one. I thought it was very smoothly explained. Let's take a quick water break, and then everybody meet back in a minute, 2 minutes, 3 minutes, 2.5. Let's call it 2.5 minutes. 2 minutes, 45 seconds. Okay, 2 minutes, 2.5 minutes. Let's not get crazy, okay? 2.5 minutes, let's meet back, and then we're gonna do our deep dive into multi-time frame analysis. All right, see you all soon. Gang, gang, baby. I didn't have my stopwatch out, but I have a feeling that that was under 2.5 minutes, right? So welcome back, everybody. Now, after a thorough breakdown of failures, we are going to dive into the main topic of this evening, which is multi-time frame analysis. Now, I always like to start this off with a question. As always, I expect the answer to be yes. But for those of you who have previously taken a course, how many of you have been taught the good old-fashioned phrase pyramid triangle or technical analysis or top-down analysis, right? You look at the larger time frames first, and then you move down into the smaller time frames, right? Educators tell you that the larger time frames are most important and that the smaller time frames are the ones to pay attention to. They're less important, or whatever the case may be. Then usually what happens is that you give you a different answer when the trade is taken, right? So they'll say that the longer time frame matters, and then when you ask about an explanation on the trade, they'll say there was 5 minute support, so I bought calls. And it's like, wait, what? Like, huh? Right? Now, while I don't think that top-down analysis is inherently wrong, excuse me, right? Resume. I don't think that top-down analysis is inherently wrong, right? Like, I believe that teaching pre-market high breaks is inherently wrong. I believe that's a bad job of educator to teach pre-market high breaks as the main core strategy, unless you're trading like penny stocks or something. I don't know, right? But teaching as the main core strategy, I believe to be bad educating. Top-down analysis, I don't think is bad education or poor or anything like that. I just think it's incomplete, right? It doesn't teach you everything you need to know about timeframes working together, right? Because what top-down analysis implies is that the larger timeframes are the most important, and that as you get down to smaller timeframes, it becomes less and less important. Or you just do this on a larger time frame and you do this on a smaller time frame, right? When in reality, the most important part about multi-time frame analysis is the idea that these time frames impact each other, right? So yes, the smaller time frames are important because they are going to play a role in what the larger time frame does as a whole, right? So for a while, I was using a different analogy, but then eventually our man, Mr. Ron G, came up with a fantastic analogy for a road trip, right? So let's picture that you all are in New York, right? You live in New York, I live in California, and you have decided that you really, really, really want to smoke a joint with me. Hell yeah, I would love to smoke a joint with you. Let's get high as fuck, bro, and just, or sis, and just chill. Let's kick it. Let's smoke a joint. However, in order to get there, you got to take a long ass drive. And because I smoke the best joints available, you have to stop along the way in Colorado and pick me up some fire, right? Some really good joints, right? Now, that trip as a whole, right, from New York to California, that's your weekly chart. That encompasses everything that you need to know about you bringing me joints in California. It starts in New York, it ends in California, right? This is everything you need to know about bringing me joints. That's our weekly time frame. However, it's impossible for you to make that trip in one go, right? Because along the way, you're going to need to do a couple of things. You're going to need to pick me up those joints. You're probably going to need to get gas somewhere. You might need to sleep, although if you're coming here to smoke a joint with me, don't sleep. Just keep driving, right? Just hurry the fuck up and get here, right? I want to smoke that joint, right? So we have our weekly chart, which is New York to California. Let's say you make that first leg of the journey, right? You make that first leg of the journey. You go New York to Colorado. You get way across the country. You end up picking me up those joints. The subsection of that larger trip from New York to California is that daily chart, right? You going from New York to Colorado, right, is a big portion of the trip. It accounts for a lot of the data of that trip overall, right? It accounts for a lot of the miles of that trip, right? That is representative of our daily chart, right? It's very, very important that you stop and go get those joints, but it isn't the overall larger picture of you getting to California in the first place, right? However, again, the trip would not be possible if you didn't stop in Colorado and get those joints. From there, you take a trip from Colorado over to Arizona because I also want you to pick up Mr. Mullet Man along the way who lives in Arizona to smoke this joint with us. So from there, from Colorado to Arizona, another leg of the journey would be representative of our hourly chart. Now, this might seem less important than the big New York to California drive, and it might also seem less important than the drive to pick up joints in Colorado. However, it's just as crucial. The hourly chart, picking up Mullet along the way is crucial. If you don't bring Mullet to smoke these joints, I'm going to kick you out, right? You got to pay attention to what happens along the way there, because guess what? On your way from Colorado to Arizona, that's where you encounter the first of your issues. Maybe you get a flat tire along the way, and that flat tire, right, on your hourly chart, aka your failed buy setup or failed sell setup on the hourly chart, is then going to impact your trip overall. Originally, it was only going to take you 3 days to get here for us to smoke a joint. Then all of a sudden, you got a flat tire on your way to Mullet, right? And now it's going to take you 5 days. Because of that hourly chart hiccup, right, that impacts the larger overall picture. You fix your tire, you pick up Mullet, you are then on your way. You stop in Wyoming, you grab Joel, or excuse me, Montana, you grab Joel, right? And then you head out from there to California. That road to pick up from Arizona to Wyoming, or Montana, excuse me, would be representative of your 15-minute chart, right? Then you drive all the way to California. That last little bit will be representative of your 5-minute chart, but you got to stop for gas along the way, right? and getting gas along the way. That last stop of gas to pee before you get there and bring me my joints would be your 2-minute chart, for example, right? However, the whole point of this example is that while your weekly chart is this New York to California, and we plan for that to take 3 days, then you hit a hiccup and it starts to take 5 days, right? Then on your last leg, you get to the final bathroom stop and gas stop before getting to me, right? Your car breaks down as a whole. You got to call AAA. That it could be your 2-minute chart making that big of a difference on your weekly chart, on the overall trip. You could get stuck on that last trip leg of the journey for 2 days, and it could potentially ruin, and it all could have started on something with the 2-minute chart. So I know that's kind of an analogy that's all over the place, but truthfully, what it should do is clarify to you all that top-down analysis is the wrong way of looking at things. Because in top-down analysis, all you do is you say, okay, there's a trip from New York to California, right? And then you have, all right, I go to Colorado in between, and then I stop paying attention about Colorado, caring about Colorado, right? And it gets disregarded. These timeframes work with each other, right? They work in conjunction. Like, they're not like this, they're like this. Not like this, they're like this. All right. That being said, there are some different things that I use different timeframes for as my primary information that I gather from that time frame, right? So the weekly chart, the larger trip from New York to California is always going to be our first priority, especially when we're looking at potential swing trades. However, I'm actually going to remove that line now. I've been wanting to do this for a few mastermind classes. I don't care whether you're swing trading or scalping. The weekly chart needs to be your priority, right? It does not matter. The weekly chart is always our first priority in identifying what is the trend and what is the information that we can gather from that weekly chart. Now, the daily chart is the bread and butter for individual bar analysis plus trend analysis. So like I've mentioned before, with the daily chart, one of my favorite things to do is look at the daily chart and say, okay, based on what I know about individual candle analysis, what could I potentially expect to come next after this daily candle, right? The hourly is the key to it all. It is where we find our levels, and it is also incredibly powerful for trend analysis and buy and sell setups. Please excuse me, I have a back thing, and I really, oh, that was a perfect crack. I really needed to get that out of my system. Resume, right? So the hourly is the key to it all for us. It's where we get our levels and where we find oftentimes very solid information from our trend analysis, right? The 15-minute is what I refer to as the 5-minute plus. It's essentially a little bit of a smaller 5-minute or a more confirmed 5-minute. I really like to use this for intraday buy and sell setups, especially after 8:30 a.m. Eastern. So after the first hour or two of market open, the 15-minute chart buy or sell setups have a much higher follow-through rate than a 5-minute chart buy or sell setup. It's just more data on the chart, right? The 5-minute chart is what I use primarily for management, right? For managing my trades, right? And the 2-minute chart is what I primarily use for early analysis on entry and exits, right? So I know it sounds like, Jake, you just told us top-down analysis was not good and not to only use certain timeframes for certain things. Then you just told us what you use each time frame for. Yes, this is the main piece of information that I gather, my main priority from each time frame. But the real key to multi-time frame analysis is understanding how these time frames sync up with each other, right? So first, I want us to envision, right? And let me actually, I know some of you already saw it, but I'm actually going to change the way that we present this slide for future, right? So let's take a look really quickly, and let me get a chart out to make this a little bit of a better visual. All right, let's load up the NVIDIA weekly chart here. Right? On this NVIDIA weekly chart, right? Let's go back, right? If something is in a weekly uptrend, right? If something is in a weekly uptrend and we are then looking for that chart to get a pullback, right? It's going to require several bars worth of action, right? for example, right here, I'm actually, rather than go to the chart, I'm just going to copy and paste this. Right? Right? So as we can see here, you know, I already revealed the secret that this is a weekly chart, right? This, what we saw and identified, was a pullback on a weekly chart that then offered a buy setup, right? At any point during this pullback, did we shift trend? Did this go from an uptrend to a downtrend at any point in time in this pullback? Throw me some answers, yes or no. No, right? No, right? It did not, right? However, what we can also see is that there is 1, 2, 3, 4 weeks of pullback, right? 4 weeks. 4 weeks of pullback. If each week is 5 daily candles, right? If this is a weekly pullback, right? Then the daily chart for this same 4-week period would have 20 candles in it. Is it likely that the NVIDIA chart had 20 candles moving down like this, but still held its uptrend? Or do we think that that daily chart would then have to have shifted into a downtrend? Right? The answer to this is that it would require the daily chart to shift into a downtrend. Right? And let me actually pause there. I did something with the copying and pasting. That's my bees. Sorry, please hold. Okay. We back. All right. So a pullback on a weekly trend would actually require the daily chart to shift into a downtrend. So again, here we can see this example here on NVIDIA. The weekly chart was simply getting a pullback. Now, in order for that weekly chart to get a pullback, right, which was right here, I'm just going to make this big so that when I go down into the daily chart, we can still see exactly where it is. Right? So which was right in this area in the middle, right? In order for NVIDIA to get that weekly pullback, you can see here the daily actually did shift into a downtrend, right? Where do we see that downtrend shift? After a failed buy setup, right? We put in here, we try to trigger a buy setup, it moves up for a day, and then it pulls back, breaks that low, and shifts into a downtrend on the daily chart, right? So it's an important conceptual principle that I want us all to understand right now. A pullback on the weekly trend would require the daily chart to shift into the downtrend, right? Into a downtrend. So a pullback on a weekly uptrend would require the daily chart to shift into a downtrend, right? Now, this works as we continue to move down. A pullback on the daily chart, right, would then require the hourly chart to shift in trend, right? So let's say that up here, NVIDIA is still in an uptrend, right? It's still in a daily uptrend. It's still forming higher highs and higher lows, right? The first clue of this starting to shift into a daily downtrend, right, would be the hourly chart going from up to downtrend, right? The hourly chart would still be in an uptrend here. It's still be in an uptrend working with NVIDIA on the daily chart. As the daily starts to shift, that would be led by the hourly, right? So we're going to do a specific chart example of this, don't worry. But right now, I want you to understand the concepts, right? In order for a pullback on an hourly chart, that would require a 5-minute chart to shift in trend, right? One way that we talked about this, and I don't have that particular slide pulled up, right, but was on the bull and bear flags example that I talked about in our lesson 3. We talked about how that going sideways kind of shifts trends. Let me just, I actually think this would be worthwhile to pull up real quickly. Right? This is the example that we talked about. We said that the market was moving up, but then right here, right, we're actually making lower highs, lower lows, lower highs, lower lows. If this was a 5-minute chart, right, on the hourly chart, right, this would simply be that stock getting a pullback, right? In order for the hourly chart to get the pullback, it would require something like the 5-minute chart to go in a downtrend. Why? Because there are 12 individual 5-minute bars in an hourly candle, right? So if the hourly candle is going to get a little bit of sideways pullback, right, 1 or 2 hours, that's 24 candles on a 5-minute chart. You are going to need a shift in trend in there, right, in order for the larger time frames to get that pullback. Right? So this continues on and it works into a downtrend. It works into an uptrend. It's the same principles across the board, right? A pullback on an hourly chart. Let's say that you had a daily chart flipping into a downtrend, right? This is just an example, just pulling it out of nowhere, right? But let's say that you were getting a daily chart that was starting to flip into a downtrend, aka it was breaking under like a failed buy setup, right? Or a failed area, a failed potential high or low, right? The daily chart flipping into that downtrend, right? An hourly chart in that example would require a 5 or 15-minute chart to actually go into an uptrend really quickly in order, right, to get the pullback, right? So I know that may sound a little bit confusing. So let's go ahead and stop right there and dive into the charts. All right, so I'm going to be flipping back and forth between the slides and the charts for just a second, just to kind of talk about a little bit of that example. All right. So first, actually, let me go back. I want to review. Let's all, before we study this chart in depth, let's review this particular example right here. Right. A daily chart flipping into a downtrend. Right. This would be triggering a pullback on a weekly chart. Right. If the weekly chart's in an uptrend and the daily chart shifting to a downtrend, that would be signaling to us that we're getting a pullback, right? Okay, I'm going to delete that there, right? This is the information I want you to have kind of thinking into this chart example, right? So then let's go ahead and share chart here. And let's start with the /ES example from today. So first things first, let's take a look at the weekly chart here, right? The weekly chart is kind of mixed. And at the moment, you could argue and make the case for me. You could tell me that we're in a range and we don't really have a clear trend. But at the moment, based on the data I am going to say that we have an uptrend going, right? We have a higher low there. It's just a brief break above, but again, we get a potential higher low here, right? We aren't forming new lower lows. So at the moment, right, we're looking at a weekly uptrend, right? Now, one of two things could happen, right? First, let's mark this out, weekly chart. Right, so the weekly chart is mixed here, but it isn't an uptrend, right? From here, we could expect, generally speaking, one of two things to happen. The weekly chart could then pull back, which could be a shift in trend because we could act as a potential lower high, but not guaranteed until we break under here, right? Or it could continue higher, right? But the weekly chart at the moment, we had an uptrend, right? Now, there are two levels that I'm going to mark that were in play coming into today. Right, we have these two levels here. So the first thing on our analysis that we've looked at is the weekly chart is that we're mixed, but we're in an uptrend, right? But we do have room to pull back within there, right? So then we shift to our daily chart, right? Now, until today, right, I would say that the daily chart is in an uptrend. Now, I personally would still say that the daily chart is holding its uptrend, considering it's holding right there. But for purposes of our example, in an actionable trade that could have come from it, right, what actually technically happens right here? What technically happens during that oval? What technically occurs during that? Both answers are correct. A failure to go higher and a failed buy setup, right? A failed buy setup would be a larger example, right, of a failure to go higher, right? But we do get that failed buy setup potential, right? We do get that failed buy setup, right? Which means, right, the weekly chart is mixed. As of today, right, we then are potentially flipping the daily chart into a downtrend, right? Again, I would say not fully until we get beneath here, but we are failing a buy setup, right? Which is that first clue for us in potentially failing our uptrend, right? So we have the weekly chart mixed, but I don't think any of us would disagree that the weekly chart in theory had room to pull back, right? It's at the highs. There's nothing wrong with it pulling back, right? We then had the daily chart starting to look like it was going to fail a buy setup and potentially flipping into a downtrend, right? Now from there, we'll work into our hourly chart, right? In what we can see on this hourly chart, this gap under 41, or instead gapped over 41.38, which is what threw me off and a big reason why I didn't take this short. I really wish we opened under it, right? But on the hourly chart here, we can start to see, right, shifting to downtrend, right? The hourly chart here is breaking its hourly higher lows, right? And shifting into a downtrend with this gap down and with this break under 41.38, right? So one of the things that we talked about earlier on, and I know this will hit home a little bit better on a rewatch, right, is that on an hourly chart, right, we actually, let me just take you back real quickly to that, right? We talked about how on NVIDIA up here, the clue that we were going to be shifting into a daily downtrend, we talked about where would that clue have come from, right? And that clue would have come from the hourly chart. This is a very similar chart to what is occurring on that occurred on that NVIDIA chart. Here you can see the break of an hourly trend started to form the daily downtrend break, right? It caused that failed daily buy setup, right? Which in turn caused, I know this is all a little bit conjumbled on top of each other now. Which and then started and caused in turn, excuse me, right? This weekly chart to start to get the pullback that it needed, right? Or that it's ultimately was looking to get, right? So let's go back to the hourly chart here. I want to start talking a little bit now about how this can be really applicable in your trades and how it trapped me today, right? So first, I want to take a look here at the 15-minute chart on the S&P 500s, right? Or first, actually, let's look at a 5-minute chart. Now, for reference here, if anybody is wondering, Jake, why did you go long on this? It was counter trend, right? And the short setup ended up presenting itself in a better opportunity. Trust me, I believe I wish I caught the freaking short, right? It was definitely a great move. My reason and rationale for trying the long stab, which worked just until it didn't, until this harsh bar here. The reason that I tried the long stab was not necessarily chart related. I did not think that the market was going to get, no, man. I did not think the market was going to get, and it looks better on ES. It looks worse on SPY. I did not think this bar was going to happen before Microsoft and Google reported earnings, right? So for me, while I thought that this SPY move was a possibility, this ES move, right? Where's the one that we were where's my drawing set? What the heck? Sorry, 1 second. I have so many drawing sets for this. All right, regardless. Let's continue on. Sorry, got a little misconjumbled there. Right? But as you can see on this 5-minute chart on ES, right? The reason I took that long stab, which again, in hindsight, I wish I didn't, was because I didn't expect the market to get this kind of vicious move down. I more thought that we were going to get a spike lower that then ultimately ended up getting bought back and kind of ended up going nowhere on the day, waiting for the earnings reports names, right? Now, in hindsight, that ended up being a crucial mistake, right? So we had this level 41.38. And then we also had the level, the main one that I was watching to the downside was 41.02. Right? So here's where I want to do a little bit of a deep dive on time frame analysis and pullbacks and such, right? So let's look at this 15-minute chart here, right? On a 15-minute visual chart of the S&P, right? What kind of trend do we have? What kind of trend do we have right here on this ES 15-minute chart? Downtrend, right? Super straightforward, right? Downtrend. Now, right here, we have 2 green bars. Within those green bars, right, we have a rally within a downtrend, right? That's all it ultimately is. It's a rally within a downtrend, right? However, right? However, like we talked about here, a pullback on that 15-minute chart, which a rally within a downtrend is the same thing, right? It's trending and then it pulls back, right? Would require a shift in trend on the 5-minute chart. Right? So here we have that 15-minute, right? We have a 15-minute. Right, we have a 15-minute move down here. We're looking for a pullback, aka some sort of little rally, a pullback from this downtrend, right? A rally within a downtrend to short, right? Now, in order for 15-minute to get the pullback, we need a 5-minute trend shift. Right? So for those on the 15-minute chart, again, especially post 8:30 today, this is 8:15 a.m., right? The 15-minute chart sort of reigns supreme. But in order for this 15-minute chart to get the rally, and then the 15-minute chart to trigger a sell setup, right? This action on a 15-minute chart is very clear. It is a downtrend followed by a rally, followed by a sell setup, right? In order to get that rally in that sell setup, we had 1, 2, 3 15-minute candles. That's 45 minutes, right? So on a 5-minute chart, we just have more data, right? On a 5-minute chart here, right, we actually shifted back into an uptrend, right? So this is what trapped me a little bit today is not only did the 2-minute chart flip back into an uptrend, which like we've talked about, 2-minute trend flips occur a lot, very often, right? But in addition to the 2-minute trend flip occurring, right, we had this 5-minute trend flip, which trapped me a little bit. So in my head, I was thinking, okay, the 5-minute trend has flipped back into an uptrend, right? We've triggered a sell setup right there. It's failed. We have put in a potential higher low that you could argue gets over this previous area right there, right? So the 5-minute chart does offer that shift in trend, right? So that smaller time frame shift, which those normally don't get me, right? Really what it was today that got me was the earnings thing, right? That I just genuinely did not think the market was going to get this sell-off before earnings. And I'm okay with that because we're right back up on earnings. So I was wrong, but like right in a sense too, right? So whatever, right? But it did cause me to miss a short on this move overall today, right? Because I was looking at this as a 5-minute uptrend trying to catch the long, right? So regardless of that though, the large point that I want to make on this sort of multi-time frame analysis example as a whole, right, is that these time frames will impact each other, right? Like we talked about, in order for this 15-minute chart to get that rally, the 5-minute had to shift into an uptrend, right? So being able to recognize that, hey, the 5-minute is currently in an uptrend, but we're still fighting a 15-minute downtrend, or we're still fighting an hourly downtrend, we're still fighting a weekly downtrend, et cetera, right? Being aware of those things gives you a better understanding of what is going to happen and going on in a chart, right? From here, this 15-minute trend was actually really, really straight up and really, really straightforward from 41.38 down into the level, right? But even here, you can see that in this bar right here, right, we got a little bit of a rally there, right? And we actually tried to break above the previous bar's high, which would be, by our definitions, a failure to go higher, right? From there, if you flip into a 2-minute chart in this oval, what happened during this 2-minute chart? During this later oval where the 5-minute tried to pop up, excuse me, where that 15-minute tried to pop up, the 15-minute got a little bit of a rally within its downtrend. In order for that to happen, the 2-minute there did actually break to a very brief higher high, right? Back above that little area right there. So I know this lesson has been a little bit scattered, and truth be told, I don't know if it's just the chart example I'm looking at, but this feels a little bit more chaotic than the last few times that I have broken this down. So I am definitely happy that you all will have the other examples to go through, right? But the biggest point of multi-time frame analysis that I want to make sure that we're all sort of clear on, right, is this 15-minute chart. Again, we use it on all time frames, but candle analysis is applicable on all time frames, right? I want you to ask yourself the question, where did this 15-minute rally come from, and what did we have to do on smaller time frames to get there, right? In order for this 15-minute chart to establish a lower high, right? In order for this 15-minute chart to establish a lower high, we needed the 5-minute chart to shift in trend, right? Now let's take another look at another name that we want that lines up kind of similar to this, right? So let's talk about Tesla here, right? Tesla is in a pretty clear weekly downtrend, right? We're making new lower lows, lower highs, lower lows, lower highs, right? Lower highs. But then Tesla ultimately got a really strong rally, right? And a strong move up. From there, right, the weekly chart is still in a downtrend, in my opinion. You could say that it's kind of in a mixed zone, but it is still in a downtrend, right? So the weekly, right, down here, what we start to look for if we're trading Tesla is saying, okay, now that we know that the weekly is in a downtrend, we need a rally in order for us to get a sell setup, right? In order for us to find a trade, we want to catch some sort of rally on this move up, right? So the weekly is in a downtrend and it needs a rally for a sell setup, right? I'm going to highlight this days right here. Yeah. Now, in order for weekly to get rally, what happens to the daily chart, right? In order for this weekly chart to get this rally up here, the daily chart actually had to shift into an uptrend, right? So this oval right here is that most recent low that we were looking at, right? So in order for that weekly chart to get the rally, we needed the daily chart to flip into an uptrend. Here on the daily chart, right, we have a move up. We see sell setups trigger. We have potential higher lows. Then we get another pullback there, potential higher lows. And we see that the daily chart then starts to rally, right? Because it is in an uptrend. Throughout this entire time that daily chart is in an uptrend, right? The weekly is still in this downtrend, and this is just a rally within a downtrend, right? Now, what I will say is this is a super, super strong rally, right, within a downtrend. So could this be the potential higher low, right, that moved Tesla up? Right? Yes, it could have been, right? But we are ultimately now ended up seeing what we are now seeing that the data is really presenting us. Is that we have a potential lower high that is getting in the process confirmed into a lower high and a continuation of this weekly downtrend, right? So again, all of these things are going to be applicable on all of the time frames that we've talked about, right? So I showed you two primary examples, right? I showed you an example of a 15-minute pullback that required the 5-minute chart to shift in trend. That was our example that we looked at today on the SPY, right? In order for that 15-minute chart to rally and get a sell setup, right, the 5-minute had to shift in trend, right? A pullback or on a weekly chart, and in our example, this would be rally within downtrend. Right, a weekly downtrend, a pullback or a rally within that downtrend. A pullback within a downtrend will require the daily chart to shift an uptrend. So I'm sorry, I know that just got a little bit more jumbled, right? But these are the two examples, right? First, we have the Tesla weekly chart that in order for it to get that weekly chart downtrend rally, we have the daily chart forming that uptrend, right? And then on the S&Ps today, right, we have a 15-minute chart that gets a rally. And in order for it to get that rally, we need to be using these smaller timeframes to identify, right, that a smaller time frame shift in trend, right, is giving us that ultimate longer time frame rally with trend entry, right? So I know it was a little bit confusing. Again, I don't know what happened in my brain, but while I think I explained it really clearly with those last two examples, I definitely know that this is a lesson that is going to require some rewatching, and I definitely think that there will going to be some benefits in rewatching some of the other examples. One of the ones that I would start with is I really loved the lesson 4 mastermind, lesson 5 of mastermind 4.0. And I have that one marked in the bonus lesson Kajabi's as snow. We had a snow example there that was a beautiful intraday breakdown of how I could use multi-time frame analysis to catch a potential entry, right? I wish I could have given a better breakdown, but my thesis was kind of wrong on this today, right? I was looking for the market to hold rather than following what the levels were telling me, right? Which ended up being a mistake, right? So while I know this is one of the trickier subjects as a whole, right? I promise you that it is a subject that is covered. It is a subject that you have a ton of material on, and that any questions that you have will be able to answer them for you, right? So overall, to kind of wrap up our analysis in our lesson on time frame analysis, right? Where I do agree with top-down analysis is in the sense of when in doubt, zoom out, right? When in doubt, when you are trying to figure out how a trade is looking, zoom out, right? And use a larger perspective and a larger view, right? And the primary focuses always needs to be on our longer time frames, regardless of whether or not, right? Regardless of whether or not you're scalping or swing trading, whatever, right? Now, the smaller time frames, while we know that those can impact the larger ones, for example, the 5-minute uptrend flip today was simply for the 15-minute chart to get a rally, right? The smaller time frames for us mainly are where we are going to focus on entries, exits, and management, and then pay attention to how they affect those larger time frame trend shifts, right? So for me, one thing I will say is that for buy and sell setups, right? The early morning session to me is my favorite time to use the 2 and the 5-minute buy and sell setups. That's where I will find the most power in them. After those first hour or so of the day, I actually prefer hourly buy and sell setups or 15-minute chart buy and sell setups, right? So I'm still watching the 5 or 2-minute, but the 15-minute buy or sell setups in the afternoon, I think get more power and more follow through. For swing trades on buy and sell setups, I would be looking at weekly, daily, or hourly charts, typically speaking, to use the buy or sell setup entries on these different time frames, right? So I know that everything I gave you on multi-time frame analysis seems a little bit discombobulated, a little bit discombobulated, right? However, right, I think it's all going to make a little bit more sense once we break into our 4 rules, right? So this is the moment that you have all been waiting for, even if you were not knowing it. These are the 4 rules that I want us to look at when entering a trade, right? So the first thing we're going to do here is we're going to copy and paste these. And unfortunately, the example I'm going to be giving is when I sold my calls, rather than taking a short entry, I exited my calls. Just fine. Again, that wasn't a bad trade. In my eyes, I just think the opportunity cost was high, right? But let's go ahead and break down the various rules that we have as a group of traders. Now, the first rule or checklist that I want you to follow is this idea of using a level or the opening print as a reference point. Like we talked about, everybody, like we discussed, right? There are millions of buy and sell setups on any individual given day, right? So in order for us to narrow those down and get our win rate up, we use the level or the opening print as a reference point for us, right? So for shorts, right, or for longs, right, or for any trade that you take, you want to have a level or the opening print as a reference point. Does that mean it has to be an exact retest of that level or that opening print? No, I'm not too worried about the nitty-gritty specifics of it. Like we talked about, exact retests don't always come, right? If you told me that you went short today on this 15-minute sell setup that triggered right here, right? If you told me that you went short there and 41.38 was your reference point, and we were $1 or 1.5 away from hitting it, I'd be like, that's fine. You are still using a reference point, right? So it doesn't have to be an exact touch, but you want to make sure that your trade thesis has something to do with a level in the area or the opening print, right? Now, the second rule that we have is with trend, right? On time, right? We want our entry to be with trend, right? So at any time that you're looking for an A+ setup, anytime that you're looking for something to put actual risk on it, you would want to have a setup that is moving with the trend, right? Again, I'm not a great example of this. I tried to fade the market a little bit today. Again, I really genuinely at my core, like I said, did not think that we were going to get a move down prior to 10% of the SPY reporting earnings, but we did, right? Regardless, though, even on my entry that was counter trend in a sense, we did eventually get that shift back into an uptrend on a 5-minute chart, which was the goal of my trade thesis, right? So rule number one, we want to use a level or the opening print as a reference point, right? And we want the majority of our trades to be with the trend, right? So then we have our third rule: when trading trend pullbacks, wait for a buy setup or sell setup to trigger, right? So when we are trading trend pullbacks, we want to wait for a setup to trigger, right? So for example, if you're taking a look at the early morning opportunity, which did offer a sell setup, where was it? Right through here. And I remember calling this one out because I did not like it. I didn't like the fact that we were shorting into low of day. We'll talk about that in a little bit, right? But when trading trend pullbacks, we wait for a buy or a sell setup to trigger, right? Meaning you see this initial move up, you see this pullback back beneath. I'm on the wrong screen share. Okay. Sorry. I got it fixed. We can't see your charts. Okay. Sorry. Wrong screen share. No problem. Sorry about that. Boom. All good. Resume. Right? So we have our first rule there, right? Again, you were on the slide seeing the rules. So it was kind of the same thing. I was just shown in a different way, right? Using the level or the opening print as a reference point, right? So 41.38 down here, right? So just for the one chart thing that I want to make sure that we covered, like I said earlier, this is the one visual example that I think you missed from just a second ago. If you told me that you took a sell setup here at 41.38 as your reference point, right? And we didn't actually tag it, I would be okay with that, right? Like I said, it doesn't have to be like an exact retest. It doesn't have to touch the level, anything like that. I want it to be used as a reference point. So our first rule there, the level or the OP as the reference point, right? I would be okay with that. So don't think that your reference point has to be an exact touch, right? I want it to be the overall larger, like conceptual understanding of the fact that markets are moving from level to level. Right? So here we see, right, we have our first three rules. Use a level or the opening print as a reference point. Second, we want the majority of our trades to be with the trend, right? And we want our entries that we take to be with the trend. When trading trend pullbacks, we wait for a buy setup or a sell setup to trigger, right? Our fourth rule, we want time frame confluence, aka we want these time frames to be aligned with each other, right? So again, this is where I'm kind of like, it's bold for me to use this example on this particular chart because I faded myself for sure today, right? I really, like we've talked about, really thought that we would not, I literally wasn't expecting some sort of crazy move. But I was trading longs here because I thought that the market would hold in anticipation of this event. When in reality, I don't care because that SPY trade for me ended up being essentially break even, right? So I'm not mad that I tried that sort of stab in there because if it worked,
right? And if SPY got back into range, I could have made 200%, whatever the case may be. The problem that I have with myself is that I started to disregard the charts a little bit, right? And more than that, what ultimately ended up happening was opportunity cost, right? I saw and identified the short entry here on that 15-minute sell setup that we talked about. I just couldn't bring myself to exit my position at break even and then immediately flip short, right? That's something that I don't like doing, right? I don't love doing that. It's just typically it ends up with me going on tilt. So I try and not doing that. And today, maybe I saved myself from that, but I missed one hell of a short trade, right? So for the sake of our example here, right, let's go ahead and look at this 15-minute chart, right? And look at, rather than where I stopped out at break even, let's take a look at where somebody would have entered a new trade as a short, right? Literally, it was the same spot where I stopped out break even is where people entered, is where new shorts technically got triggered in, right? We have these 4 rules, right? First, the level or the opening print as a reference point, right? So we have this level here. It happened to be right where near the opening print is. Like we talked about, I would consider that a fine example of a level or the opening print as a reference point, even though we come up just a little bit short of it, right? Now, second, we want our entries, especially on anything that we would even dream of considering A or A plus, we want to be with the trend, right? So check mark 1. Right, we have the level as a reference point. 2, if you took this short entry there, where I stopped out at break even on the long, right? If you took this short entry there, right, that checks rule number 2. Check. We are with the trend, right? And we are trading a with trend entry. Right there, we also have rule number 3, right? Check that when we are trading a trend pullback, which is what we would have been doing, right? You wait for the sell setup to trigger, right? Which right there, we see in this oval, we see that the sell setup triggers. Now, above all else, our 4th rule is that we want time frame confluence, right? AKA, we want the time frames to be aligned with what we're thinking, right? And this is where I'm kicking myself the most for missing this short today, is that the daily chart, right, was giving us that alignment today because we had that failed daily buy that we were talking about, right? So I can go back in time. I'm not mad at myself for trying the long-sided stab on SPY, but what it caused me to miss, right, was a trade that did align with all of our rules, right? All 4 of the rules that we were looking at and that we break down are in alignment on this short that's set up today, right? Where did that thing go? What the heck? Where's that? What the heck? Where did it go? Right? Looking at this 15-minute chart here, what we see, right, is that all 4 of our rules align, right? We have the level in the opening print as a reference point. We have a with trend entry. We have a trend pullback that triggers us into the setup. And we have that time frame confluence that allows us to think that this is actually a reasonable potential move to occur, right? So the unfortunate part about my break-even SPY stop today was that I ended up missing what would be a quality chart type of setup using these 4 rules, right? Now, my trade on SPY that I took was definitely not an A+ setup, right? And it's hence why I used an extremely small position size on it, right? For me, I was more looking for the big move up, a big potential percentage gainer due to that, the earnings holding after hours. And in the process, I definitely cost myself an A+ short setup, right? That being said, though, these 4 rules really are our checklist in terms of what you want to be going over prior to entering a trade, right? So the next time that you go to enter a trade tomorrow, and please, again, do not full port anything tomorrow, run through these 4 steps and ask, are all of these things in alignment? If they are, if all 4 of these are truly in alignment, you probably have a damn high quality trade setup on your hands, like a really high quality trade setup on your hands, right? That, my friends, is our technical system. And I know that this one, again, a little bit of a jumbled lesson we start with failures. And I do think that was one of my better explanations of failures that we had. We dive into multi-time frame analysis. I know that we covered a lot, but that is my technical system as a whole, right? Now, the minute we are done, you guys are already LFG. I don't need my camera. I don't need to hold up. The minute we are done, like right now, I'm going to go over to Kajabi and I'm going to press publish on all those other bonus lessons, right? So immediately you are going to get access to all that other stuff. I don't give it to you for no reason. Please go back and watch all the other chart examples. You can skip the beginning review parts, but watch all of the other multi-time frame chart examples. I think there are some other examples in there that get explained really, 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 really well. And I think it would be valuable for you to go through all those. Don't cheat the system, right? Do the work and go through all those lessons, right? Then after watching at least 1 or 2 more multi-time frame analysis videos, then what I would do is start to go into the bar by bar 2 videos there and do a deep dive on those 2, because those are great for now that you know the entire technical system, right? That you'll be able to watch those bar by bar videos and really get the absolute most value out of them. For those of you who still have questions, right? Like, Jake, your technical system isn't complete. You never told me how to find stocks. I promise you, we're on lesson 8, we tie all of this together. This is those 4 rules that we just covered on a trade is actually just my introduction to it, right? Going to do a deeper breakdown on our lesson 8 on exactly how we find everything pre-market, how we search for stocks, what fits our pre-market criteria, my favorite sports, my favorite setups, and then tie those 4 rules back into what was occurring, or back into, excuse me, what we just talked about tonight. All right. So now, with that being said, let's now start the hype. Now I can get my video. Now we can do it. I have to press start. Lesson 5, baby, the complete thick one. This one was, thick daddy full of information. Students are also going to get access to so many other lessons. This was extremely, extremely thick, almost 2 hours long. I love you all so much. Seriously, this has been an amazing start. I know it's been information overload. Do not hesitate to fire away with questions. All I ask is that Thursday, Friday, Saturday, just give us a little bit of time on questions and stuff, because we will be in person meeting for the first time ever, right? So I love you all so much, and I cannot wait to see you soon. I love you all. Gang, gang, baby.